Hi, welcome to this video day, which is on the 6th of February, or on Sunday. In this video, we're going to be looking at a simple Forex trading strategy that includes our favourite sentiment indicator, the COT net traders positions. If you use the indicator correctly, it can get you low risk, high profit potential reversals. Now, in relation to this, I want to look at some pairs, and the pairs I want to look at all include the Canadian dollar. We are going to be looking at USD CAD, also GBP CAD, CAD JPY, and finally AUD CAD. We'll look at the charts in just a moment. Now, before we go over to the charts, I just need to make clear that this is my view of the charts as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and our strategy, and also check out our daily technical sentiment analysis of 14 FX pairs, including the ones we're going to look at right now, just go beneath this video, click the link, and you can get live access to our member centre. You can also follow us on our Facebook page, join our Facebook group of traders if you wish as well. Now, what we're going to do before we look at the individual trade setups, just want to look at the COT net traders positions. Right, let's go over, take a look at the charts. Right, just on the chart of the COT net traders positions, this chart is from cotbase.com, which is a really good chart in terms of visually illustrating the COT. Now, note, on the COT, it's always foreign currency first. This chart is CAD USD. We, of course, trade USD CAD, so I'll put the chart the right way round in a moment. This chart is just to show what big money is doing against each other. Okay, so you've got commercials. These are hedgers. They're seen as smart money at turning points. They're only going to move their hedges aggressively if they think prices have overshot fair value. Okay, large speculators on the other side, they can very often be right about big trends, but at turning points, they're very often the wrong way round. I've done some illustrations here. Now, in terms of small speculators, and they're just irrelevant. Irrelevant. We want to know what the big money is doing. Now, here you can see speculators heavily long, commercials heavily short, right at the top, and we break to the downside. Now, the movement down is pretty big. Speculators stay long throughout most of the movement. Okay, we get to this bottom here. Look what happens. Speculators are selling. Commercials have decided overshot fair value. They come in to buy, push off to the upside. Then we have another top up here. What happens? Before the top, commercials have maneuvered to a short position, speculators to a long, commercials are right again. We come down. Then the commercials come in long at this bottom, spec short. We push off a bit. Then the commercials drop down their hedges. Then they come back long, push the price up, speculators still short. Now look what happens at this top here. The speculators come in long right at the top, commercials go short. We do have some downside, a little bit of a rally, a little bit downside there. Which way are we going to go? My own view is, the way I view it from this chart, I think we're going to go in favour of the commercials. Now, this is not a timing tool, okay, but it does help you with your technicals, and you can also look at the reasons of why the commercials and speculators are moving the way they are. Now, we're going to do just that right now. We're going to go over to the chart of USD CAD. I'm just going to use the chart from our member center to give you my key levels of support and resistance. But before I do that, I want to look at crude oil. Now, when we're looking at the COT net traders positions, we're normally asking ourselves, why have the commercials suddenly turned bullish of the USD, and why are the speculators getting really bearish? Now, one of the reasons, I think, is crude oil. Got a big rally up. What is it, about 40+%? Basically, the rally up, not really much to do with supply and demand. Speculators are buying in response to those tensions you've got between Russia and the Ukraine. Okay, now in terms of, we took recently when crude oil broke up here above 85, makes a nice move up above 91. The CAD didn't strengthen. I think the market expects $100 or more a barrel in crude, and I think that is priced in for the CAD. Okay, now in terms of other reasons why I think the commercials are bullish the USD. If we look at central bank expectations, I think the market is way too hawkish about what the Bank of Canada will do going forward in terms of interest rates. They're not going to be too hawkish. We've got slowing global growth. That traditionally is bad for commodity currencies. It's peaked out. Okay. Now, on the other side, I think the market too kind of dovish on the Fed. Even with recent good data out of the US, the market is not seeing um, as many interest rates as will probably have to come. Okay. So I think the USD is going up. Okay. Now, in terms of the playing this, I just want to go through how we've been playing it ourselves. We did have that big fall there. When we get back above 125, we bought. Up we go. Came back. We're clipped out on that tail below 126. Minor profit. Get back in above 126. The last weekly forecast, I was looking for a breakout of 128. We don't get it, and our stop was tight behind the 127 level. We get taken out in this tail. We reset to come in through the round number. Okay, so you can see where we've got in 127.20. It's kind of minor profit at the moment. Okay, now in terms of this pair, how would you play it if you wanted to get in and you were bullish of the USD? There's two ways. If we dip back, you could come off the 127 level on strength. And I think if you did that, you want to stop back behind this second level support. You can see ours 126.30 is just back here. Or you could go for a break of the round number 128. I haven't drawn the level in, but you can see a tail pokes at 128 there. We briefly get through there, but we can't hold the level. Okay, I think if we go through again, we should follow through to the upside. Okay, so on that one, you could have a tighter stop just behind the body, 127.70. I'm not sure if I said that already, but we're looking for 130, then potentially 135. Let me just show you the monthly chart. Body here, tail here, tail here. Line up with 128. So if we break out the 20-month moving average as well, if we break clear of it, then 130, look for a follow through to there. Then longer term, I think we could go to 135. So plenty of upside potential. I also think, markets are pretty nervous at the moment, and I think risk aversion is going to gather pace, which will further support the USD. So that's our view of USD CAD. What I'm going to do now very quickly is take a look at the COT net traders positions for the three crosses, and then we'll look at the important levels of support and resistance. So I'm just going to very briefly look at the COT net traders positions in terms of crosses, as I said. Now, in terms of the crosses, there is no official data that comes from the CFTC for the crosses, but you can make the cross yourself by just selecting the two majors that make up the cross, like say AUD USD and USD CAD, and you can calculate what's going on in the cross. Now, we do it as just a simple ratio. So this is large speculators where my cursor is, and what it indicates is basically shorts over longs. Okay, so what we have here, 6.8 to 1 in terms of shorts over longs. Okay, so the speculators heavily short of the AUD, but look at the commercials, they're 4.1 to 1 in terms of longs over shorts, so bullish of the AUD. We then do the divergence between the two groups, and just in brief, any divergence above 10 will really interest us, and this one's 10.8. Now, if we go to CAD JPY, you can see here the large speculators are long, 6.7 to 1 in terms of longs over shorts. Commercials 3.4 to 1 in terms of shorts over longs. So we've got another plus 10 divergence here. Now, the one we don't have a big divergence in, or over 10, is GBP CAD at the bottom. You've got speculators 3.3 to 1 in terms of shorts over longs. Commercials at 2.7 to 1 in terms of longs over shorts. That's only 6.1, but this has turned around in a big way, from speculators being long of the GBP and commercials being short of the GBP. So it's a rapid reversal, which we always like. Okay, so yeah, COT net traders positions show the commercials are bearish in the crosses as well. And I want to look at the first cross now, which is going to be CAD JPY. Right, CAD JPY. Now, in terms, if you look at the JPY generally, in terms of COT net traders positions, the commercials are pretty long or heavily long of the JPY in most pairs. Okay, the JPY is extremely oversold. Obviously, we view the CAD as overbought. Now, in terms of this pair, we rallied up here when we poked through 92. We just thought we wouldn't get clear of the round number. Sold at 91.70. We came down, rolled over. And I thought we'd follow through on this candle, but we didn't. Trapped in a range. So it's kind of minor profit, minute about 150 pips, but I've reduced our position by 2/3. I've just left a small trade in. I want to see this range break. So if we break below this level here, 90, so I want to see 89.80 to put in a bigger position. I'll take it and see if we run to the downside and the speculators get hit on stop. And hopefully we don't reverse back above the level again. Yeah, if it goes through the level, doesn't follow through, we can always take it out. But in terms of if we do, look at the risk reward, really good. And we could run on to the monthly sport, another 100 pips, 84. So potentially 500 to 600 pips in this pair if we break out to the downside and follow through. I like the risk to reward on this trade, and I also like kind of tight breakouts. Okay, when you're traveling in a channel, you get the breakout in terms of the way you view the sentiment, which obviously I view as the CAD is going to break down. We shall see. GBP CAD is my next pair. Now, in terms of GBP CAD, we were long in the weekly forecast I did last week. We did bank out 150 pips, and then we wanted to come back in, and we did it at 172.35. So here, so we got a bit there. Came in, we did exhaust. Then we're a little bit firmer on Friday. So basically not too far away from our entry. How would you play this one? My view is if we break out here above 173, I haven't drawn the line in, we can see the pokes at the level, okay, not following through. If we break out, we should go to 176 in my view, then 180. I like pound pairs in the crosses. I think, I won't go through the fundamentals in detail, but the fundamental backdrop for the pound is much better than for the commodity currencies. And also, I'm thinking we might get risk off. If we get risk off, then the pound will definitely get an additional boost against the commodity currency. So far, it's doing okay. I'd like to see this level give way. You could always buy a dip if you wanted to, but I think the high odds trade is on the breakout. I've taken out half my trade on Friday, looking to stick it back in above 173, 173.20. Now, in terms of the long-term perspective, I'm hoping it's going to do this. This is GBP NZD. Look at that for a rally, and we've been basically bullish of the pound since the bottom. I think, in terms of the CAD now, it's as overbought as the Kiwi was down here. We shall see. Right. Last cross, AUD CAD. Now, this one actually, saying at the last video, caught me out in terms of we came down aggressively. I wanted a long trade, got it, exhaustion back, stopped out. Then we fall again, and we decide to come back in, and we get back in. You can see it at 89.70. Then we push off, kind of scrappy price action. We dip towards 90 on Friday, but just feel there's so many speculators short, not too much downside and plenty of upside. And we did get an aggressive entry. So you can see what we've done, 89.70 in, stop at 89.80. Okay, now if I was coming into this fresh, 90 is support at this moment in time. If we break clear of this high, I think you could go long for a move up to 93 as the specs get taken out on stop. So decent reward against the risk. And if you look at the commodity currencies, yeah, CAD is the most overbought of all. I just feel the AUD due a really, really good bounce. I think actually the NZD is bullish on the CAD as well. But I think, out of the two, I prefer AUD CAD, which is this pair. So yeah, the COT net traders positions can alert you to trading opportunities. They're not a timing tool at all. Keep in mind, commercials are hedges. They're not losing any money, so the price can run against them in the short term. But if you do your own thinking in terms of why the groups are doing what they are, you can get yourself some trading ideas and good risk to reward trades. So, right, that is the video for today. We'll see how these pairs go, and I'll update them in my weekly forecast, which I'll do in the next day or two. Thanks for watching.